What's good, guys? It's Nick. Appreciate you hopping on and taking a dive into some technical analysis, along with some fundamental analysis on AMC. Just wanted to pop on here quick and get a video in to kind of go over some things that I'm looking at, along with some confirmations that I got from last weekly's close. I think you guys are going to be very well pleased in what we got to say here. So, if you could, just with the YouTube algorithm, I always appreciate the like and the comments, just to kind of avoid the shadow banning of all these stupid algorithms within social media. But I will try and keep this one relatively short, mainly focused just on AMC, so that way we can respect the viewer's time along with getting down to the point. So, as always, not a licensed financial advisor. I do hold my Series 763 and my SIE, just no longer sponsored by a firm, so everything I say just take with a grain of salt and understand that it's my educated opinion based on time on the desk, along with a few years of personal trading outside of that. So just wanted to pop in, give you some weekly, daily, and 4-hour TA, some chain analysis, and then our weekly projections for the week. So as we get into it here, you'll see we're on a 10-year weekly chart. So this just kind of gives us a good macro perspective of where some trend lines are coming from, and what we're looking at going into this week along with previous squeezes. So zooming in here, first off, the biggest one I got, we'll get to this VPR in just a second here. Actually, we can cover it right now while we're on the zoomed out portion. The VPR, so you got your POC, or like your point of control down here, meaning your strongest kind of volume within. Let's see, it goes to about 1308. We've been trading well above that, and we got a strong zone of VPR here that gives us the ability to hold some supports that most people think we should be falling under, based on different schematics and fractals. I'm not a huge fan of these bar patterns that people always throw on top. It's valid to use, but that's all I'm going to leave it as. Anyways, what I'm looking at here is the VPR strength that we have at 1480, 1470 range. That was the support I kind of kept calling out on the week on any sort of dips. I was like, I don't see them pulling us under 1470. We may go down and test those zones, and that's exactly what we did. But they couldn't pull us under, regardless of the extremely low volume and all the tactics that they tried to pull throughout. I do want to kind of show you some things though here. So as we kind of start breaking through these zones to the upside with this stair step, our VPR regions get lower and lower, meaning there's more volume to be consumed within these zones, and much quicker movement. So I know this stair stepping seems a little boring, but you have to have it for healthy continuation and in order to get to these other zones up above. So it's way better than straight up, which we'll stair step until we hit our elevator. But in the meantime, what we're doing the past 2 to 3 weeks is extremely healthy in my opinion. Here's your 1640 break and why this is so big for me, and what I think is behind it is, one, big gaps in VPR, basically all the way up until we get to that 35, 36 range, or down at previous highs around 34. So main thing I wanted to show you on this weekly though is the close. I mentioned this on Twitter if you follow me on there. At Nick Leeson12, or if you type just Nick, you can find me on that. Something that happened, and what I was talking about at the beginning of the week and last Sunday's video, was this 200 SMA on the weekly candle. So we got our close above it, pretty well above it, and kind of solidified the break of that 200 SMA. And we went up and tested this kind of matrix here, regression line down along with an upper trend line. So extremely healthy movement here. There's a few conditions I wanted to meet on the week, and we got both of them. This is one of them. It's on the weekly candle here. So the significance of this 200 SMA break and hold on the weekly candle is, sure, it's not the full body, but if you look back here, here's your candle where we got the break of the 200 SMA after a deep test down, and then a strong close above, but it's kind of in between, right before the 34 run. And you got this candle here, 200 SMA, strong break above and close above, but the 200 SMA does run through it. So just because the full body isn't above doesn't mean that it's not a healthy movement. So that was a big one for me that I really wanted to see happen. You got your standard deviation band curling up as well, which is extremely bullish. You got this nice carve out in the past couple weeks here, and then seeing this standard deviation band continuing to curl to the upside is extremely good for us. It's arguably even better than what we saw on 34, just because of how deep this was going, and then you just kind of got that small pop up because it wasn't fully continued as the nice little halt there. So that's my weekly confirmation I was looking for, and then we'll pop into the daily quick, because this was a major one as well. So these are just daily candles, 10-year. You can kind of see the VPR gap starting again above that 1640 mark. But what is extremely interesting to me, and what I love to see here on our daily close, is a couple different things. If you dive in here, and I'll kind of compare the two runs here shortly, but just for perspective, I want to show you kind of what occurred. So I talk a lot about the standard deviation band crossing over the 50 EMA. So this is it right here. We got that cross when we got the big move up to test that 16-15 range on the 12th, which was extremely healthy. This was where I wanted to be at that zone. And then I did mention in my previous video, depending on what CPI does and market volatility, that may be a point where they try to pull us down or prevent this breakout from fully occurring. So that's kind of exactly what took place here. But what really excites me is that your standard deviation line is still curling to the upside, and the confirmation of this crossover is kind of completed after the 3 days. And then I mentioned on Wednesday night, that midweek video, that we got our inside bar on the daily. So usually that signifies continuation. In this case, you can kind of see down here at the bottom, they did pull volume down, which is kind of expected from market makers in a situation like this. But they couldn't quite break us underneath that trend line there, which is extremely bullish to see, because you got your inside bar. This inside bar is an inverse hammer candle, which usually signifies exhaustive selling pressure, followed by a doji candle, arguably an inverse hammer candle as well, but this is more of a doji candle setup. And then following that, on a Friday, we got a hammer candle with the body being at the very top and no wick, which is this kind of setup of a pattern here is extremely bullish. It's good for consolidation, kind of a slight retrace, as if like this is what they're signifying, and that the selling pressure is being exhausted. So this was the exact closing candle I wanted to see on Friday. Obviously, it would have been nice to have it up here more, but you're kind of getting this U shape here, which is extremely good, while also holding this crossover. So we got the weekly 200 SMA cross, we got the daily standard deviation line crossover with the 50 EMA, and holding it along with an extremely bullish 4-candle setup here for the remainder of the week. So as for comparing the two runs, I do like to at least look at this, just because there's a lot of comparisons here that I think people tend to overlook on where we might be. So give me a quick second here. I pointed this out with that weekly chart that I posted. I think it was not last week, but the Friday's close of the week before. Kind of the comparisons on the schematics that it's looking at, and what each run resembles. So leading into the 34 run, you kind of see a lot of similarities of this January run kind of mirroring our 34 run, because if you zoom in here, there's not a ton of data before it, but you get kind of your deeper low here, and then it runs up. So kind of like here, you get your deeper low, runs up. Very similar setup on the 50 EMA as well. Once that's broken, it takes off. But the main thing I wanted to focus on here is the movement after that January run and the movement after our 34 run. The one thing that is slightly different, and just this is all based on different levels with AMC's history, is kind of this carve out here, but I'll kind of show you where it lines up in comparison. But basically, here's your 34 run, and you got this deep kind of retrace to fill different gaps, and then markets were different, so we got this double bottom here, pulls up to the upside, and then swoops back down. Kind of where I see something similar like that occurring is in this region here. You kind of see your double bottom forming, a slight retest of that bottom range even further, and then you get your push up, which is similar to this push up here that we got to 1604, and then you retrace back down and coming back up above. So I would like to see this section here kind of come back above your 1640 mark, because that would confirm that we're clearing this previous resistance that we got stomped out on, to give us this similar setup going into June. I know that was kind of all over the place. I may post a picture later to kind of depict that better, but on the weekly it looks identical. Let me just see if I can pop back here to show you. There we go. Just for movement wise. Got it. Okay. Oops. So we got our deep W, same here, deeper W. We got the shot up here, came back down, and here's our retrace, and then this movement right here would kind of be the equivalent of something like this here, and then you got your retrace again, but instead of creating a new lower low, you kind of got your doji off the bottom, came back up, and this is kind of what I'm looking for here, but I would like this candle to kind of break this zone, maybe test a higher range and then come back and retest before we go back up. That'd be a healthy region to go through. But let me kind of go into the 4 hour here and put some more light to that so that it's not kind of all over the place. Our 4 hour is looking extremely tasty. If you've been watching my videos before, you'll understand why here shortly. So I kind of harp on that standard deviation crossover. It applies to every time frame. Obviously, the further out time frames is where you get your bigger movements, but the 4 hour is kind of a good gauge of a macro perspective while also holding a near-term micro movement. So this is kind of the core of the video that I wanted to highlight on as we get into this, and some similarities to the previous run to 34. So as we climb in here, I mentioned this stair-step action and how these retraces are good and they're healthy, and that's what we kind of want to see, especially to fill up trading zones, because if you get something kind of straight up like this and it gets ripped down, you don't even get a chance to fill up these trading zones, and it just allows them to pull it off further. So here is where you got your biggest movement. This is coming down to test your 200 SMA, and then you not only broke a regression line, but your standard deviation line and the 50 EMA crossed on the 4 hour. So that's where you kind of got your big pop. And following these crossovers, I've always mentioned this, is that your biggest bullish movements come after this cross occurs and when we stay above the standard deviation line. So we got a nice little healthy consolidation. After the breakout, kind of confirmed that this zone was taken over, the 1360 mark. Went up and tested the new trading range, and then this is where your retraces kind of start. After that occurs, you go up and we tested this line, came back down under it, kind of kept testing it just to check the demand within the market. Came down underneath the standard deviation line and then straight back up. So this is kind of your retrace, which is normal to see within these movements because bears are going to try and pull you off of different trading ranges. So it's not uncommon to see this, especially with this amount of shorts in here. But if you notice here, we stay above the standard deviation line almost the entire week, which is what excites me the most, is that not only are we respecting this crossover, but we're respecting the standard deviation line with healthy movements above. Nothing too crazy where you start spiking outside of your standard deviation bands, because that's usually when you do see a little bit of a retrace. But if you notice here, we respected this trend line, slightly came beneath it twice, but then ended up closing the week on the 4-hour above that standard deviation line. So going into this week, the biggest thing I want to kind of look at is a respect of this standard deviation line. One thing that could occur, and I'm trying to get more of a gauge on the Monday's market. I know futures open here shortly. I don't really focus on them until late into the night. But one thing that I'm really looking to see here is maybe, just maybe, one more retest of this 15 level, the trading range here, before we really start moving up. We don't need to, but I wouldn't put it out of the picture quite yet. I think just Monday mornings we usually get a little bit of a green or a red dip, both broad market and AMC wise. So if we do see that in the morning, don't be surprised. And then I'll cover option chain analysts here shortly, but I just kind of want to get more into the weekly projections here so I can keep this video at a relatively low time frame. So just hopping into the 20-day 1 hour, a little bit more on the VPR side of things. I like to kind of keep this up just for reference. So this is the last 20 days with 1 hour candles. You'll notice there is a bit of a gap underneath 1474, 1472 mark. So I'd like to continue to respect this line and not get below that, because that's when your gaps start coming out. But the main part, or main zone I'm looking to break out of early on this week is really kind of where we closed, to be honest. Preferably 1529, like the after hours close around 1530. 1529 to 1530 mark. I like this gap up here. That's kind of where we start seeing our quicker movements or more volatility, is in between that 1530 mark up to 15, let's see, where's our top here? 1575 range. So I'd like to see us kind of fill up this range more tomorrow and not consolidate too much. I think we've done a lot of consolidation within this range, but kind of just hold this upward movement, because here's your triple cross down here on the hourly. We're staying above the standard deviation line on here too, along with this 50 EMA, but I don't want to give them any near-term slips of these two lines, as in the standard deviation coming under the 50 EMA. Just on the micro, that gives them a little bit momentum within that 1 to 3 hour time frame. But going into the week, I do want to give some weekly kind of projections. So now that we covered all the macros and what's occurring there, I want to let you guys know how this week is going to be set up, because obviously that's what everyone is focused on here. So going into it, if you notice here, hang tight. One thing that really excites me too, and why I think our strength is even stronger than the 34 run, is our OBV. going into the 34 run, OBV was extremely low. People thought AMC was done for a while, so you didn't see much buying pressure. Got bottomed out on the RSI, and then our OBV kind of peaked up here. Well, we've tested this top kind of resistance from an OBV standpoint 3 separate times now. So the fact that we're trading at the current OBV of our 34 run at the peak really intrigues me. It shows a lot of strength and consolidation is sitting behind here. So that's why I really think this break of the 1640 mark, along with this regression channel, is going to be extremely, extremely strong. And we're going to see some crazy movements here. One thing that I wanted to point out as well is on your RSI, what I mentioned was that consolidation off the CPI, or the potential occurrence of that dip to occur, is honestly exactly what we wanted. We got our RSI tested a couple times. At the peaks here, you can see it's kind of overbought, and then we got this major cool off on RSI, which is really what I like to see. It allows us to have plenty of upside room here to break this channel and then still stay within a comfortable zone to not have this pop up too crazy. Eventually RSI doesn't matter with AMC, but in the near term it is good to see this cool off, so that way we can have more zones and flexibility as we get up to this mark here. But going into the week, if you look over here, you see this almost identical similarity to the two, to where we kind of got our box shape underneath here, came above, and then we actually got our triple cross, or our crossover, much earlier, which is good. But if you notice here, we kind of got this same dip down beneath before we started doing this sideways trading a bit. So this here could arguably be this test, and then they're able to stretch it a little bit, but I'm expecting either Monday or Tuesday to get a candle similar to this right here, where it's about I want to say it was 8 to 10% day. I'm not sure if that's going to occur Monday or Tuesday, but what I'm gauging here is that early Monday we could come down and retest that 15 zone, maybe a 1480 mark. I think volatility off the weekend is going to be strong. We're going to get a higher volume day, and if we do go down to test these zones, I don't think it's going to stay there long. So expect a potential quick drop off open. Again, nothing dramatic, maybe down to 15, but I really think it's going to get moving much quicker this week. So off this drop tomorrow, I'm expecting a test of this regression channel, anywhere from 1570 up to about 1590. I don't know if it's going to be early on in the day or later in the afternoon, but this is going to be tested, I believe, on Monday. And then Tuesday, going into the second day of the week, that's usually when we can see some of our stronger days. Not a ton of options expired in the money. There was a good chunk of them. Would have liked to see 15.5 close in the money, but from a weekly standpoint, we went from 12.30 to 13.28 to last week I think it was like 13.55, 57 range, and then this week was 15.37. Like, this is a huge movement, and the fact that we're sustaining it shows the demand behind it. So for the week, I'm still kind of trading this zone. If 1640 gets broken, it's either going to be most likely on I want to say Tuesday or Wednesday. I know tomorrow's the X date for GameStop, but it could wait until Wednesday or Thursday. But honestly, sentiment coming off the weekend, I think we test the 1640 early on, later in the day tomorrow or Tuesday mark. If it is Tuesday, I think we'll break this regression channel, go up and test for 1640. We could get pulled down to about 16 range and kind of get in this tight little pattern here, and then on Wednesday we'll get our big break, because when this break occurs, I think we'll honestly go straight up towards 1884, somewhere within this region. So mid to late week, look for a break of the 1640, potentially by end of day on Tuesday at the latest. And then Wednesday or Thursday, I'd like to be trading into the 17s, particularly upper 17s towards that 18 mark. And I really think that this week is going to bring a lot of strong movements, especially with GameStop and the volatility behind that. I just want you to watch 1640, because when that does break, it's going to be moving in a hurry. I don't want to cap it at 1884. I just know this resistance is going to be relatively strong. So if you notice here on the backside, gosh, we got that test almost immediately after the 1640 break within the same day. So when this break does occur, we could go straight up, test this, and if it's strong enough, I like our build up now. We could break through and test the previous highs in January 21, and then come to retrace into earnings before we get our big movements. But right now the zone I'm looking at is 1640 up to this previous high, and then 22.5 range, 22.35 range. So within this week, I think it's safe to say we'll be breaking 1640. Highs on the week, it just kind of depends what it wants to do throughout this 1884 to 22 range. If we break 1884 with confidence, I think 22.5 is definitely in the picture. It just kind of all depends on the strength through this, market conditions and whatnot. But I know we're close. I know that this breakout here is going to occur, and it's going to bring a lot more strength than people think. And I fully believe that it will be in the upper 18s to low 20s to close this week. And then going into next week is where I really think some fun's going to start. Got GameStop split starting to trade on the 22nd. Week prior to earnings is next week. So the end of July is just looking extremely bullish. I know TWE's been talking about it, and some other people within there. So it just, the setup is there. It has my weekly confirmation, my daily confirmation, 4-hour confirmation. The last kind of piece to this is just making sure that we can get through the 1630, 1640 range. So that's my focus on the week. Once we're through here, my videos are going to start getting a lot more condensed to kind of show you zones to look at. Right now I'm just trading volatility within it, and once this breakout occurs, I'll have a much more concise thesis on this and different ranges we can go to. I just want to get through 1640, test or break 1884, and then kind of once we're over this zone, this trading zone right here, that's when the fun's really going to start, and I'll start looking more for major leg ups. So like I said, this week anywhere from 1640 up to potentially 22.5 is very much on the books. It all depends what news wants to drop. I know there's been talk of Disney and AMC with different rewards, along with the GameStop catalyst. Like, I don't ever want to cap AMC. I just want to kind of show you trading ranges I'm looking at, so that way we can be better prepared for when the big leg ups occur. So this will be a major pivot point, though. I can guarantee you that. It's going to get us out of a lot of possibilities for future downtrends, and just give us strong strength, building up into those VPR gaps, which is what I'm looking for the major tilt. So that is my thesis on the week. Chain analysis, I'll cover this quick here. We're looking very strong into this 15.5 strike, along with the 16s. I personally grabbed a good chunk of 16s last week. Open interest is definitely outweighing the call side versus the put, along with volume, and then our delta strength is also higher. So Major thing here is it's just showing that strength is still there and the demand is behind it. Um, I'll kind of make some videos with more in-depth analysis of options and understanding the Greeks and what they mean. But this stair-stepping movement gives us extremely good potential for gamma ramps. Um, so that's kind of where our big leg ups come from. So while we're going through these ranges that I mentioned, options are a big tool for me to look at just to see the strength on the second layer of the market. So I'll cover those further. Hoping to get another video out or a live session tomorrow, and kind of just continue to take this day by day. But on the week, like I said, 1640, potentially all the way up to 22.5. I don't want to quite call that yet, but I think this range here is very much a possibility. So appreciate you guys tuning in. Like I said, if you could leave a like, comment, and subscribe, that'd help out the algorithm a lot and keep this moving in the right direction. Like I said before, I got a lot of things and projects I'm working on to hopefully kind of intertwine the community a lot more and help better equip us. So look forward to sharing that with you in the next coming 1 to 2 weeks. In the meantime, hope you guys have a great rest of your Sunday, and look forward to chatting with you later in the week.